Well, first of all, thank you very much, Richard, for your invitation today, and Álvaro for hosting us, all of us here in your headquarters in Madrid. Just talking about PATRIZIA, well, we have some news from the last month as we acquired some other investment managers in the last quarter. PATRIZIA right now is the largest independent investment manager in Europe in real estate. We are managing right now 40 billion. We have only presence in Europe, more or less in 20 countries right now, but just focus in Europe. The company started 32 years ago, and the focus of the company is real estate in Europe. We don't do anything else apart from that. In the case of Spain, PATRIZIA, we started activities more or less 2.5 years ago, middle 2015, and from that particular moment we were starting to invest in a wide range of products and risk profiles. We started with high street retail let's say in a different way to other players, because we started investing in Malaga, which is not the obvious location for any international investor, but we really thought that we found a really good investment opportunity, and we started doing high street retail, let's say, from a core position. Then we moved to Madrid, where we acquired a couple of assets, residential. I'm just going to Carlos' presentation in the core part of the Madrid market in Claudio Cuello Street, and then to the office market. As I told you, during the last quarter, we acquired Triuba and Rockspring. That means that now from these 40 billion that we have across Europe, 1 billion is more or less located in Spain, which makes PATRIZIA a good presence in our market. Just particularly talking about me, just a few seconds, I've been dedicated to real estate for my full career from 1999. From different angles, I started to work in JP Morgan in the investment banking division, doing M&A for the real estate industry, based in London. Then I moved to another a private equity real estate firm from the US, O'Connor Capital Partners, where we're in charge of Spain and Portugal and doing transactions for more or less 400 million euros. And then moving to the real industry, which is NH Hotels and Sotogrande, where I was the CEO of Sotogrande for more than 4 years. Then moving to KPMG, again to the advisory side of the real estate industry, and finally going back to the buy side with PATRIZIA.
Okay, great. Maurizio.
Okay. I'm heading the strategy for BNP Paribas RAIM, so the investment management unit of BNP. And basically we got AUM in excess of 25 billion in Europe. All sectors, mostly we do core, but we are also expanding in other styles, like of course value-added opportunity. We do all sectors, mostly offices, but we have a very strong interest now also in logistics and in the so-called alternatives like healthcare, senior housing, and so on. In Spain, we are not that big yet, but we have an active strategy targeting mainly logistics and offices here. I'm trying to work out the strategy.
Great, thank you. Nicole.
Yes, so I joined AF Advisory last year, and just to say a bit about AF Advisory, I think I'm the only one who's probably representing the debt side of things. So we work with investors to help them structure deals on the sort of debt side, but also equity side in terms of raising equity or debt funding, junior, senior, mezzanine type of debt. We work basically with investors such as family offices, smaller sort of investment funds, smaller property companies, etc. So everyone who might have a need to sort of structure a little bit, need to structure deals that are a little bit out of the usual, that require maybe capex, lease up, etc. And what we try to do, or what we aim for, is that we work very closely with the lenders and help the investor to sort of get through the whole closing process of getting the debt structured much more quickly. We basically aim to have a structured process that is quicker, and ideally we can also save the investors some money doing this. Typically we sort of try to save more than we ever cost, so it works out good for the investor. About myself, I've been in the real estate industry for like 15 years. I've started my career at Moody's rating agency, where I sort of was rating CMBS deals. I went through the sort of securitization cycle in the 2006-07 period, when I worked also originated CMBS for Citigroup. Later on, I joined Deutsche Bank for a very long time to then work out real estate loans and selling off bad loans and portfolios to help getting out of the mess. Yeah, and I'm still on the debt side, and we look at deals now across Europe. We're focusing at UK, Netherlands, Germany. We've seen Germany just now in the presentation, very active country, very much on the investor focus, but also Spain in second place. So we also have been looking here at deals in Spain. So yeah, that's all.
Great, thank you. Álvaro.
Okay, so CMS, we are lawyers, so we have no asset under management for the moment. Not yet. What we got is the largest real estate specialized legal team in Europe. We have a footprint across Europe in any of the countries that the investors seem to prefer to invest. We also have some offices in South America, Colombia, Peru and Chile, and the Middle East and the Far East, now in China. As regards CMS Spain, we are celebrating our 60th anniversary of the firm here in Spain. We provide all kinds of legal services. We team up with our banking and finance team for real estate finance, of course with our planning team for more administrative issues, and myself, I am heading the real estate and construction transactional team. We are six lawyers specialized in real estate transactions, and we've been active in, I would say, all sectors which are now active in the market with a number of clients. So one of them are here now and will not let me lie too much. And that's basically what we are.
Great, thank you. Oscar.
So Qualitas Equity is an alternative asset manager in Spain. We have different products from private equity, fund of funds, family office advisory, and real assets in infrastructure. Traditionally, we've been exposure on real estate through managed accounts from the family office advisory branch. And during the our last venture in the real estate, it's Tectum Real Estate Investments, that it's a build-to-rent platform focused on residential urban intermediate segment.
Great, Antonio.
Thanks. A bit tight here. Welcome everyone. I'm Otero, head of transactions for CBRE Global Investors in Iberia. I've been 11 years in the company, and I'm in charge of leading the transaction side. CBRE Global Investors in Europe, its origins mainly by the acquisition of ING REIM in 2011. And now we are one of the largest real estate investment management firms with 100 billion dollars under management across the globe. In the case of Europe, we have under management around 45 billion euros. And in Spain, we probably manage nearly 3 billion. In terms of sectors, we still remain quite strong in the retail sector with 19 shopping centers, but increasing exposure to other sectors like logistics, which we have 32 logistic platforms and 5 developments underway now, 3 office buildings, and we recently set up a JV with AXA and Greystar to acquire the Resa student housing business from. In terms of transactions, we've made more than 2 billion transactions in the last 2 years. Of it, 75% was acquisitions and the rest divestment. We are quite active, both selling and buying. In terms of acquisitions, we are quite keen on increasing exposure, as I said, to new sectors and quite keen on resi, but I guess I'm not the only one. So.
That's great, thanks Antonio. Lots of fascinating things coming out of the presentation, but also just what's happening in Europe at the moment. Maybe coming to you first, Maurizio, obviously in your role, you're looking across Europe at kind of the macro figures, looking at research and strategy. GDP growth coming through in continental Europe especially, and particularly in CEE, where we were in Warsaw last week. You know, huge amount of GDP growth there, and also in Bucharest and places like that, where you're seeing up to 9%. What do you see, I guess, as the influence of those trends on the markets here? And let's focus a little bit on Southern Europe, particularly in the context of Europe, and also Spain. How do you see those kind of broader macroeconomic trends influencing the real estate markets here?
Well, I'm very happy that GDP growth is not only peculiar to cities like Bucharest or Warsaw, but actually even more boring cities like Paris, Frankfurt, Munich, Madrid, Milan are actually doing better. So, and these are, let's say, the core cities, the core markets we are looking at in Europe. I think that we came out from a 2017, which was, especially for real estate, was quite good. We were beset by the political risk in 2017, you know, elections in the Netherlands, in France, very important, elections in the UK, and eventually the issue about Catalonia. But we even survived that. And actually, I came to a point, you know, to say that, you know, geopolitics is important, but up to a point. What is extremely important, especially for real estate investors, is really the cycle, is how your economy is performing. And what we are seeing today is that growth is accelerating, well, I would say everywhere, aside the UK. Confidence is extremely high in the market. So, and the political risk is actually, well, it's much lower than before. It's true that we're going to have elections in Italy, but no worries, not much is going to change anyway. 70 years of history can prove that. And I can tell you, I know what I'm talking about. But the journey, and today, all the discussion is more about interest rates, and I think we will go back to that, and I will give you my spiel, just telling you why I'm not too worried about interest rates going up. So I think it's as good as it gets. We're growing above trend growth, actually, in every country. It's from the demand side, if you ask me about 5 years forecast, of course I would be much more dubitative, but just for 2018, I really do not see a problem in terms of demand. The most important thing I think for us is that, and I would say it's for Europe, but it's especially for Spain as well, because it's got a particular volatile history, and is to keep supply in control. So I'm very positive about Spain, and I'm very positive about different sectors. And if we speak about offices and Madrid and Barcelona is a slightly different story. We'll get there. If we manage to contain supply and not supply to go back, you know, to the old days before a crisis, there will be rental growth. There will be good returns. There is all potential here.
Okay, good, thank you. And Oscar, just coming to you in terms of the, you're obviously very active in Spain. How do you see more macroeconomic trends. Do you think that's going to have a positive influence in terms of investment appetite? We've seen some of the slides there from the presentation of Carlos, the demand from international investors. What's your sense of that? Do you think that the appetite will continue, Spain will be a winner because of this macro picture?
Well, yes, I think the macro data and the underlying macro assumptions remains strong on the Spanish market compared with alternative markets. What we see is going through the cycle, so different kind of investors 4 years ago with higher cost of capital, more opportunistic approach towards the capital markets, and more institutional investors coming into Spain. I think for the next short-term period, I think it's still, we'll see attractive investment flows from the international investors, but also probably incorporating also the domestic investors, family offices, as we may be seeing entering into the different segments of the market. So on keep on the cycle, the new incumbents on the lower cost of capital, growing the attractiveness.
Okay, good. And just coming to you, Álvaro, in terms of last year, if we looked at the sort of outlook sessions that we were doing in 2016 and 2017, looking towards the market, political risk was playing a much greater part than it had done previously. So before there'd been a lot of discussion about availability of debt, but suddenly political risk came up, especially you'd got Brexit, you'd got Trump, you'd got all kinds of things happening. The sense that we've had in the other sessions has been that the market just seems to be able to get over these things and assess the risk and put it into a position where the risk doesn't go away, but they're able to deal with it. What's your sense of that? Do you see political risk as being a major problem in 2018? What's going to keep you awake at night?
I really think that the market has shown that it's able to overcome this kind of political risk. One example, I think that 3 years ago, when the far extreme left won some of the major cities in Spain, there were a window of uncertainty that people didn't wanted to invest in Barcelona, Madrid, Valencia due to the new local team, because they actually didn't know what to expect. 3 years after, in an event in London, I was hearing that the good thing in Catalonia was that Podemos will balance the extremists. So the people that were feared 3 years ago were seen as like a balanced leverage in 3 years after. Of course, the political risk exists, and we've seen that some markets, some specific markets in Barcelona City, for example, has been beaten up due to purely political measures, such as hospitality. But I think that we are not in that kind of uncertainty or so worried about what can or can't the politics do, because we have shown that we have a strong framework in our legal system, so we have the control weapons to prevent the political guys to go too far.
Okay, good. I'm going to come to the political risk specifically for Spain here, and also the view of international investors on Catalonia in a second. But Antonio, I just wanted to pick up with you. Obviously, coming from the UK, Brexit has been a very major topic. One of the big fears from the UK is that international capital will go to London and then immediately sort of spend its money elsewhere and invest in continental Europe rather than in the UK. What's your feeling of that? Are you seeing more interest in Iberia from international capital that maybe before might have just been, put more into the UK and are now looking to continental Europe? Do you think there is a pickup for continental Europe and for Iberia in general from Brexit?
Well, our experience in global investors is that we have seen a positive flow of capital from investors which were targeting UK and now definitely more interested in continental Europe when Brexit was announced. So the immediate reaction was positive flows of capital for continental Europe in exchange of flows to UK. But as far as we see the situation now with the sources of capital we manage, that situation has stabilized and well, I think people is monitoring closely what are going to be the final conditions of the Brexit, but so far there's calm in terms of moving targets. So immediate reaction was there was a flow to continental Europe, but no, now it's stable.
Okay, good. And Nicole, I just wanted to pick up with you. You're obviously talking to clients across Europe. What's your sense of how the situation with Catalonia has been looked at by international capital looking towards Spain? Was there an initial sort of negative view because there were some portfolios that didn't transact at the time? And has that changed? What's your sense of it? And also, anybody else? We've all been very polite so far, but anybody else can come in on that. But Nicole, let's take your view first.
Yes, thanks. Sorry. Few things to pick up on, but I can come to the Catalonia situation first, which not being even Catalan or Spanish. Actually, it's quite interesting for me to follow because I'm based in Barcelona, so I see that firsthand every day. And I have to say, I mean, we already looked at some deals last year that actually got stopped throughout the sort of second part or sort of last quarter of last year because of the crisis and the situation, and that investors were indeed scared off a little bit. And we've seen it from Knight Frank in the figures that obviously the last quarter or two last quarters are always down and sort of certain investments or take up for Barcelona, which I think definitely has to do with the crisis there. And also for that we get asked always, like, if you invest in Spain, where would you go, what should we do? It's very much, people are very much worried about the situation from the outside. And I guess that's the same always also when Brexit first happened, right? The Americans were the ones most worried of what's going to happen with Europe. So it's often the outsiders who pick up on it, I think. I mean, with Catalonia, I've definitely not just seen it in real estate deals, but also in a lot of other sort of work situations where definitely people feel projects were not going there any longer. I mean, it's interesting, though, that Antonio mentioned that the initial flow of investment was straight after Brexit, and now you don't see that much. I mean, my feeling would be a little bit different. I mean, I've seen definitely over the last, like, end of 2017, from November, December, even more people asking about, I mean, American investors, also Asian investors, asking even more about being willing to look into Europe. I mean, we've seen that Germany was the strongest focus, and I think that will continue also over 2018. And then Spain is definitely the second country after, because somehow the flow for France or the interest in France has kind of calmed down. So I would say it's gonna continue even stronger, because with Brexit negotiations currently not going that well, or not looking like it's gonna be a very soft Brexit. It keeps changing every day. But I think that investors are definitely looking at their strategies across Europe and diverting a little bit from the UK, especially also because London is so overpriced. And there are not so many more cities that sort of international investors like to go to. So their next focus is going to be like Munich, Frankfurt, Madrid, Milan, and things like this. So.
Okay, good. And interesting, it was one of the points also, questions coming in from the audience on that, which is, has it actually changed your strategy? So, Borja, in terms of PATRIZIA, has it made a change in your strategy in terms of your investment?
And just continue with Nicole's answer, and just from a pure buy-side view, and also from a Spanish point of view, because at the end we're talking about our country, and obviously it's normal, I think, that we see the Catalonian problem as maybe bigger, no? or in a different way that you can see from a more objective and external view. Obviously it has a consequence, especially when we're talking about core investors. Core money really fears about uncertainty, and what is happening in the UK with Brexit, or what is happening in Spain with Catalonia, means uncertainty, and means that people avoid to invest in those markets. At the same time, we are talking about two important markets. Let's say London City and the rest of UK. It's a huge market. It's one of the most international ones, and obviously is continuously is attracting people and is attracting investors. But it's true that there was, and we noticed as well, there was a drop in the interest of international investors. In the case of Spain, I think the answer is exactly the same with Catalonia. Fortunately, for the rest of Spain, it's not happening, and we see international investors moving away from Madrid to the most important cities like Bilbao, Seville, Malaga. Valencia is working well. In the case of Barcelona, we have noticed a lack of interest, I hope temporarily, especially with some specific type of investments. No? For example, in the case of offices, and I think as we saw in Carlos' presentation today, this morning, I mean, the volumes and the final take-up is lower than recent years, and I think that's a clear signal. And from a pure investor point of view, as I told you, I mean, if you are a core investor, you are not going to be there because it means uncertainty. This doesn't mean that this type of investors don't like Barcelona. It's not the case. They like Barcelona. They see that could be a very good market to invest, but they prefer to wait and see.
And that's an interesting point, because certainly in Scotland, when there was the referendum there, investment dropped heavily before the vote, picked back up again. What's your sense, Maurizio, just looking at it maybe from a city point of view?
Can I actually, sorry, about Brexit, I think that one point of it we haven't said, when talking about here, is it's not only, the UK thing is not only about Brexit. I mean, when you look at the buyers and sellers, you will see that in London, who is buying is only Asian, or mostly Asian, with a bit of Germans. But the UK investors are net sellers completely. The REITs are selling. But this is not only because of Brexit, this is because the UK was already at an advanced point of the cycle. Rents are falling. The thing is, what is very important is fundamentals. In Spain, despite the politics, we still expect rents to go up. We have a positive view. In the UK, it's the opposite. So people are anticipating this.
And just in terms of the cities, looking at Madrid, looking at Barcelona, I mean, one of the questions that we had, interestingly, in Warsaw was, what's happening in London? Is it terrible? And the answer is not really, no. London's quite a big city and it just carries on. And I suspect, if you look at the stats and the data when we've done things on attractiveness, livability, where people want to go for student experience, things like that, Barcelona is always very much up at the top of that. So from your sense, do you think that kind of city level analysis is going to be more important than these sort of shorter term political aspects?
Well, on a personal note, I would tell you that I did my thesis at university on the Spanish economy. I was supposed to stay only 15 days in Barcelona. I almost spent 2 years. And that was, I think I liked it. It's one of these places that are extremely attractive for different reasons in Europe. Absolutely. What we are seeing today is like a bit of a dislocation. So countries still remain important. What I'm saying is, well, you asked me to go to investing in Greece. Well, probably I say, well, there's still a bit of a national risk. But what is really important, and mostly when we do our analysis, is cities. You can have a country that is doing so and so, but the most important cities, the ones that are growing as population, they are attracting jobs, they have good infrastructures, they're doing much better. And this is obviously reflected into real estate performance. Just give you an example, in Germany, generally, I would say just net of immigration, population is going down. It's a kind of trend. But when you look at the major, most important cities, like the Frankfurt, the Munich, the Berlin, they are actually growing very, very rapidly. And supply of real estate cannot, actually, especially for residential, cannot catch up with demand. So you have these kind of things where cities are actually driving, and there will be even more drivers of the economy, absolutely. And I would say in Spain that this stays about Madrid or Barcelona. Not saying the other cities don't count, but it's about the engine of the country is this.
Okay, good.
I think that one important point is to differentiate between sectors, even in the Catalonia and in the Barcelona or great Barcelona area. So what we are seeing is that the logistics are still doing fine. Residential, in the sense of local developments for the local demand, are still there, and there are developers here with a focus in Barcelona which developments are ongoing. Core investments, office, also retail, those are the sectors that are suffering much, and of course the hospitality with the moratorium and the lack of new licensing, which simply makes that we've discussed with some operators recently that they have this office to hotel strategy, and this simply does not work in Barcelona because this is impossible to get. So that I think it's important to differentiate between asset classes.
Okay, good. One thing that was mentioned there, Antonio, was the occupier market, some of the fundamentals there. How do you see that in terms of the opportunity for rental rises? I've been speaking to people recently who are thinking about setting up an office in Madrid to try to capture the rent rises that they think are potentially going to come into the market. And there was an element of that also in Carlos's presentation. How do you see that in terms of the fundamentals and take up and occupier demand? Do you think there's potential for rent rises, let's say, over the next 2-3 years? What's your sense of that?
My sense is totally aligned with what Carlos said, and I think that there's a strong potential for rental growth. So not much to add there, except for to point out that in my view there's an important fact to take into consideration, which is the heterogeneousness of the stock. When we're talking about offices, and I don't know if you agree, Carlos, even in the same location, you're able to see very old buildings, which will have it harder to grow in rents. Whereas when you find completely new buildings or fully refurbished, you have a great potential to grow, and the difference in rents from one building to the other is massive in the same location as well. So that's the only thing I would like to point out. It happens as well in logistics. It happens in many sectors. So.
And in terms of office, is that particularly true? One of the questions we've just had there was about secondary locations, particularly for office. Will they see the same rent rises coming through, or what you're saying really is no, they won't? That there may be rent rises, but you think they'll be smaller in those secondary locations?
I think there's a strong potential also for growth in secondary. It depends on how secondary you go. What I mean is that there is also strong potential for growth out of the CBD or the very prime locations.
I think just to complete Antonio's comment, I think it's a natural way of the evolution. I mean, at the end of the day, when we are coming up from a situation where prices were really attractive in terms of rents, people started to go or to move again to the city center, to the CBD1 of Madrid. What's happened that with some time, rent increases, and just to complement Carlos' presentation, I think there is a very interesting information, which is the vacancy, no? Because we were talking about the take-up. What is the real vacancy of the CBD of Madrid? It's really low. And if you move to Barcelona, it's a little bit higher, but it's quite low as well. So that means that if we have a certain stability in terms of global economy and what is happening in the world, we see a good evolution of the rental prices in the office market for the following 12 months. No? If nothing strange happens, should be like this, because there is no enough space in the city center. And as a consequence of that, and just going back to your question, that means that all these secondary locations will start to receive new interest from people that cannot pay now the 30 euros that you, Carlos, mentioned in your presentation as the prime rent in Madrid, for example. So they need to move to another place where they are going to pay between 17 and 21. That means that they will move to some other secondary, and again a natural movement from companies being in that area that need to move to another cheaper area where they are paying between 12 and 15. So I think it's natural.
Okay, good. And Oscar, just coming to you, I'm going to dig down a little bit more because there have been some questions coming in on specific sectors, and I'm going to drill down into those in a minute. But Oscar, just while we're on this sort of secondary area and also potential for increase in rents, you're obviously building for PRS, for rental rather than for sale. What's your sense of the potential for rental increase here in the Spanish market, and how do you see that, let's say, in terms of the differences between Madrid, Barcelona and the other areas where you're working?
Okay, so taking also the point of Borja and Antonio, that really the evolution, or the classical evolution of the rents being starting from the core then to the secondary locations. Also, I think it's there's also an important point that maybe, or we consider that we may see also certain decoupling into the different yield behavior between certain secondaries and certain prime, especially on residential that we are more focused on. So we are talking about different kind of demands, different kind of rents, and maybe we may see different behavior with a certain decoupling and not so linked, especially on periods of time. So we are confident in certain secondary locations, obviously, but I think in this moment it's a moment also to be careful on the analysis of this secondary market.
Okay, good. And we've just had a question actually from Juan, so thank you for that, Juan. And if they don't answer it properly, come back to me, or come back to them directly. Which picks up that point actually about secondary markets, that you've obviously got Barcelona, Madrid, but are there B cities in the same way as there are maybe in other countries, or is everything else a C city? And what's the availability of finance like for those cities? What's your sense of that, Nicole, just in terms of the financing side? How do you see it, and how do the banks and other people offering finance see the cities when you look at them here in terms of Spain especially, and maybe even Portugal as well?
Yeah, so I mean, obviously from the financing side, I mean, clearly you asked between sort of A, B or C cities. I mean, it's clearly Madrid is the key city, and it's probably more easy to find finance there, in Barcelona as well. And again, right, the office sector that we just talked about is always the one that everyone is most familiar with. So, and especially if it's in a prime location, etc. And that's the type of things that we're not so worried about. I mean, what we often get more involved in is obviously also the other types of alternative sectors where it's a lot harder to find financing, for example. So alternatives and retail development, that is all more difficult if you require financing. And then I guess when you come to office, if you want something more than 50% loan to value, it can also get more difficult, obviously. But everyone is fairly comfortable with prime location and office property. I mean, in terms of cities, again, you don't find that many lenders and that will probably follow you into B city, although I still think like B cities I would consider Valencia, Malaga, Sevilla, etc. And then afterwards we would come to sort of C cities. And it's harder, I guess, the Spanish banks are fine with obviously looking across the country. But again, when it comes to development finance, there might be a problem that they are not going to be financing and just anything, especially when it needs a lot of turnaround and lease up and additional investment. So yeah, we definitely see that the lenders are worried. They don't want to get into the same situation. I mean, we can see that CaixaBank, Zareb is still a big organization. Everyone is still selling loads of loans that are actually often in the middle of nowhere, or assets that are still like land, residential, half-finished developments, etc. So these are also still there, and we must not forget that those assets also still need a solution, basically. I mean, the office sector might be growing, but there's a lot of still assets on banks' books that are in the middle of nowhere.
Okay, good. I want to pick up some of those points with you, Antonio. Just in terms of your view, do you think that you're beginning to see investors slightly squeezed in terms of looking for returns? Are you having to view things that you might have seen as core plus now as core? Some locations that maybe you wouldn't have looked at 2 years ago that now you would look at. What's your sense of that? Has there sort of been a gradual creep in terms of your views about the market?
No, I don't think the point of the cycle makes investors fool themselves or let themselves be fooled. Although it is true that some investors are willing to take more risk, but as long as it is under control. I would say, in our experience, we see investors willing to take more risk as long as it is related to manufacturing or strong product. For instance, we have a good example in our company. We just set up a joint venture with Montepino to develop logistic platforms. We were not a developer. We didn't develop during the last few years anything at all. So we weren't able to take any development risk, but we saw the opportunity of creating new product with a clear competitive advantage towards vis-a-vis the current stock in logistics, and we convinced investors to take a bit more risk, but because the final outcome is going to be a really, we believe it's going to be a really strong underlying set of assets.
Okay, good. Yeah, go ahead.
Well, one thing to add, I mean, on the risk side, I mean, I think what I see here in Spain, is what we've also seen in the UK very much, is it's just more specialization. I think investors just become more specialized, like you get to these specific, just logistic platforms, you get to people who just do student housing, especially when it comes to alternatives. So I think there's more specialization, so they are more comfortable taking risk in that specific area, but they will be very specialized.
Okay, good. A question that's also come in here is about value add. What's your sense of that, Borja? Do you think there's still, given the yield compression that we've seen across Europe, but also could see in Spain from the presentation, what's your view on that? Are there still value add opportunities here? Have investors missed the boat? What's your sense for 2018?
Well, a double answer. First of all, and linking with the last question, I believe that some traditional investors really focus on core are moving a little to some other risk profiles. In a particular case, some of our traditional investors are moving to, let's say, core plus, and in some cases they are also investing with new vehicles with us in the value add risk profile. So I think there is a little movement, and I think this little movement is a consequence of the, let's say, driest situation of the core and super core investments. I'm just going to your second question, or to the final question is, yes, we still see opportunities in Spain on the value add sector. In fact, well, it's part of our focus, and we are involved in several transactions. It's true that you need to be careful where you are analyzing these type of things, because now I think that everybody owning an asset in Madrid thinks that is gold, and you have to be careful on the analysis in case that you are analyzing this opportunity for rental purposes. You have to be careful with your rental analysis. Are you going to get the rents that apparently could happen? And in the terms of a development that you want to sell, which is typically something in the value add risk profile, it's being careful with the sell hypothesis that you use in your model, because I don't know if it's quite convenient to do your numbers and your analysis based on just future expectation. At some point you have to go to reality, and you have to do the numbers based on what is happening today in the market and what are the prices. If we just do the analysis through pure expectations, I think it's dangerous. But still, you can find some opportunities, and I think we will see during 2018 many investors entering into the value add.
Okay, good. Álvaro, I just wanted to pick up with you just before we finish this kind of part on the trends especially. Are there any particular things in terms of regulatory risk or tax risk that international investors should be looking at, or domestic investors? And also, just in terms of the capital that you're seeing from the client side beginning to be interested, because you will see it at an earlier stage, we will tend to see it as the deal gets announced, but you're seeing it as people are thinking about making those moves. Are you seeing new sources of capital who haven't been interested before, whether that's Chinese capital or Japanese capital or Latin American? Are you seeing new sources of capital coming into the market or looking?
So regarding the first question, I think that more than risk, there are regulatory differences amongst the Spanish regions that are every time more important. For example, the transfer tax and the duty treatment varies hugely. Region from region, you get more friendlier treatments in transfer tax, which may make the same transaction be taxable for 2 to up to 10% in terms of transfer tax, and that of course makes a difference, and it's something that the investors are concerned about, of course. As regards sources of capital, there are exotic investors looking. I mean, we had a Korean investor looking for farms in Extremadura, but what we that's the sort of thing that we are seeing. What we are seeing actually in a more not so exotic way is what Oscar was pointing out in sense of local investors, family offices, which were really scared of the real estate market after our tragic last decade, and now they are now looking for new opportunities in the sort of build to rent or other core opportunities. If you want to look at it in the sense of long-term low yield transactions, but with the need of value added in sense of developing new supply, because what we see is that, as Borja has pointed out, the existing supply is perhaps overheated, so there is no room for an actual sensible core transaction.
Okay, good. Let's dig down for a little bit just into the sectors. Maurizio, in terms of the strategy that you're seeing, investor intentions, what's their kind of view overall? Do you see certain sectors outperforming others in 2018 on a European-wide level? And then let's drill down into particularly Iberia and Spain.
Well, investors' intentions, the INREV, the latest investors' intention survey just came out, and it's just confirming very strong interest for real estate in 2018. Well done. We're very happy with this. Having said that, because we are, of course, it's not that easy to find this type of core we all look for. If I have to dig down to sectors, I would say that, as I said, we're particularly active in offices and logistics. And when I say offices, I think we already talked a lot about it. There are good reasons to be in this sector. Logistics is my favorite. Why, at least? And why would be my favorite in Spain? This goes back to the presentation we've seen from Knight Frank. When you look at Spain and you look at retail sales online here in Spain, it's roughly 5% of the overall retail sales. European average is 9%, the UK was the most advanced with 18-19%. So what do we expect, I think? I'm just expecting a boom. And I'm not saying that the Spanish will buy food online. I hope not. This will never happen anyway. So this is, of course, but for all the rest of the sectors of retail sales, this will happen. Just inevitable. And this will have strong effects for the logistics sectors because we will need many more warehouses here. We will need modern warehouses. It will be very good for this sector. And on the other hand, I think there will be issues about the retail sector as well. Because one thing generates the other. Not saying that the retail sector is going to die or is in crisis, but there will be formats winning and formats losing. As simple as that. So, you know, the high street, the kind of high street that you find in Madrid will do well. We will do well at very low yields, but we'll stay there. But for shopping centers, it will be much more difficult. So you will have the good shopping centers doing well, and you will have some shopping centers that will do extremely bad. And mainly because of e-commerce. And I'm saying shopping centers, there is an issue about retail parks and generally about suburban retail. Last sector, I haven't talked about it, is the residential. Again, we talked, we are quite positive. I think Spain will be one of, well, most countries will have a house price growth in 2018. And Spain is one of one that is going to benefit the most, I would say. Unfortunately, we are not doing this.
Okay, good. Antonio, just with you, CBRE Global Investors active at the moment across Europe in logistics, and obviously historically very active as well in the retail sector. What's your view of that, and particularly what's your strategy for Iberia, Spain and Portugal? What's your sense of that in terms of retail, but also in terms of logistics? And just picking up the point that Maurizio said about the two, you know, do you see them as competing, or do you see them actually as part of the same picture from your investment strategy?
We see them part of a similar picture. Logistics is a bit more appealing as a company, but interest for retail remains strong. Although in both cases, I think it's worth noting, as I said before, the degree of all the proportion of all the stock that we find in the local market is strong, and yeah, in terms of logistics, the difference between the brand new state-of-the-art platforms, if you compare it with all the stock, is huge, and you see that there is a pipeline of nearly 700,000 square meters of GLA coming in Madrid. You better be careful with what you buy. I mean, because then the new platforms will have a clear competitive advantage vis-a-vis the old ones. In terms of shopping centers, the same. There are a lot of challenges to adapt the retail experience to what the customer is currently demanding. We see new kind of formats, or not that new, but in shopping centers like the open air. It's very simple, but the experience is much better. We currently manage Xenia, which is a good example at a very good, well-performing shopping center with a completely different experience to the traditional ones. Unibail Banco has currently refurbished, fully renovated Glorias in Barcelona. It's impressive what they've done there. So I think and there are a lot of challenges in the classic shopping center formats. For instance, you still see a lot of shopping centers anchored by a food operator which is operating a 15,000 square meters hypermarket. I think that's a completely dated format for obvious reasons, and you have to think what are you going to do with that, because it is an issue. You have plenty of space there which is unproductive. Then there are a lot of other issues like Inditex plans. What are they going to do? We need to explore that in depth when analysing new investments.
Okay, good. The Inditex thing, I think, is a very interesting thing at the moment in the market. I want to pick up the residential side with you, Oscar. What's your sense of residential positive views on that generally across Europe in terms of the demographics? What's your sense of that, particularly in Spain? Do you see the sort of growth that was kind of anticipated, I think, in Carlos's presentation, where we've come to the bottom of the cycle and are now picking up? Is that what you're expecting to see?
Yes, really. I think we've seen during the last 12 months strong growth specific on Madrid, Barcelona, and that it's been linked, also pushing secondary cities. I think all the drivers during the last 12 months has been growing, rents, prices. There's also, in certain areas, lack of available land. We should consider that we've seen many years without new developments, so probably in certain areas will be still in the next years lack of land for new developments. And also the resources of the construction resources. We've seen in Spain a hard crisis that has made what we may say a lost generation in the construction resources. So we see also in the short mid-term constraint on the construction prices. And but on general terms, optimistic on the residential. All this flow of the real estate from the commercial part and looking for higher yields, we start seeing on the residential, also on the individuals coming again to the market. So optimistic.
Okay, good. There was a question coming in as well on hotels. I know CMS is quite active in the hotel sector. What's your sense of that? I heard actually from the receptionist in the hotel that there were 82 million visitors to Spain last year, higher than the US. So that would suggest to me that hotels should do quite well. But am I wrong? What's your view on the hotel sector?
No, absolutely. We are seeing all sorts of hotel transactions, from sale and purchase of existing hotels to new developments, to the refurbishment and rebranding of existing not so good hotels to make really high quality, mainly in the islands, Balearic Island mainly. And we are seeing, as I commented before, new operators that are willing to enter into the Spanish market, mainly, of course, Madrid, Barcelona, but also other cities that have done their homework, such as Malaga, is being ever more attractive, and again the island. I think that's the main focus of interest now for the hospitality sector.
Okay, good. Yeah, go ahead, yeah.
No, I think is totally agree on this. That another sector that should do quite well in Spain is the more alternative sector, like healthcare and senior housing. Now, I haven't done much work on it, so I know there are differences across regions with different legislation in Spain. Probably something that you have to look into detail. There's maybe also a cultural issue, but it's just if you look at the demographics, of course, there is a strong potential. It's something worth it to look at, that's for sure. And a higher yielding compared to other sectors.
And that's quite interesting, Nicole. In terms of the alternatives, we've also got different living formats coming through. We've done a couple of sessions last year, particularly on micro living, for example. So student housing, micro living, those kinds of things. Do you see those as real opportunities in the market? How do you see those, and I guess how do investors see them in terms of, and banks in terms of financing? Is the financing available for that, or does that have to be financed in a different way? What's your view?
Yeah, I think obviously alternative sectors will always be niche. They will never be as mainstream as office, obviously, but I think, yes, I agree. The healthcare, which I also haven't done much more research into, senior living and so on, that is definitely will become a more important area. But what I've done more work on is on the student housing side, student living. And I think Spain, again, is becoming a target country for sort of international students, also from wealthy students from South America. But I can see also in Barcelona there's quite a few from Eastern European countries as well, because actually there have been some statistics out there. I think Savills published a long report that student living and sort of financing your studies, Spain is the cheapest country within Europe. And obviously the universities have been improving a lot, offering international degrees. So now that you don't have to go to the UK anymore, where it's a lot more expensive, you can actually be sitting on the beach and having your international recognized course afterwards and come out with an MBA that you can go anywhere. So I think it's a very attractive place. Well, when it comes to financing, again, that's more difficult. Right? The banks are not that familiar yet with that sector, although it's actually producing a high income. But it's the fact that you first need to finance the development, because there still needs to be a lot of construction and new companies coming in and sort of creating the right platforms and the right formats that will be accepted by sort of students.
Yeah, one interesting thing about these alternative investments is student housing is happening. There has been a boom in transactions last year. The Versa portfolio, of course, but also other not so big transactions. What is not happening, or I've not seen yet, is a proper senior living scheme in Spain. In the sense of course, we have senior residences and operators really good in that market, but I should be in 2005 or something like that. It's the first time I saw a project to make a retirement complex where every senior had their own villa and some sort of healthcare, centralized healthcare. That's not happening, and that's not working. But I really don't know why. But the reality is that no, that projects that I've seen in layouts have actually been developed.
Okay, good. I think Antonio, CBRE Global Investors, taking more of a focus on student housing and some of those niche areas. Is that a growth strategy for you, where you see opportunities across Europe? What's your sense of that?
Yeah, it is. And I would need to say I'm fully aligned with what Maurizio said before. I mean, we think there is a differentiating yield spread in Spain when you compare to other countries in Europe, and we think there is the sector. We think it's very defensive, very resilient when it comes to a downturn in the cycle. And we would like to increase our exposure definitely to those kind of asset classes, hotels as well. So yeah.
Okay, good. Borja, just coming to you, and then we'll wrap soon, because I want to leave time for coffees and a chance for you also to ask questions to the speakers here as well. But what's your sense of that? And also, I just wanted to pick up on office, partly because I think my understanding of it, and I might be wrong, but that things like WeWork, those kinds of things that are new office types of format and ideas. Actually, there's a lot of that in Spain already. How do you see that as influencing the office markets? Just from your sense, is that a positive thing? Do you think that's a change that is going to continue going through as new younger people come through into the market, something that they're expecting and wanting? What's your sense of those kind of more innovative, what would be viewed as disruptors, but could also be an opportunity?
Well, obviously, I mean, the society is moving, and there are new trends. And obviously this affects on the final design of our product. Doesn't matter if we are talking about offices or we are talking about residential. But I remember that I had a very interesting discussion with Juan José Bruguera, with the chairman of Colonial, just discussing, because he was really focused on that they are doing a large investment in order to be revolutionary from the office point of view. My point is, obviously, all of us were trying to change and to adapt our buildings to the society needs, and obviously the technology means a lot, and we have to adapt all our spaces to the new technology and to the evolution of people working due to the technology. But I don't consider that as a revolutionary thing. I mean, it's obviously the offices 10 years ago were completely different to offices 100 years ago. So, but I don't see a revolutionary thing. It's just a question of evolution, and obviously even with the materials, we are building our resi office and logistic buildings and hotels with completely different materials, which allow us to be more efficient, to have more net space, net lettable areas, and I think this will continue. I mean, we will adapt all the assets. As investors, you always want to keep your asset in good condition, so you always do capex and you improve your assets. But I don't see that as something out of mind that is impossible. I think it's easy to understand, and it's a process that will continue according to the evolution of the society.
Okay, good. What we'd like to do here is also make sure that you have something concrete to come away with. So let's start with you, Borja. Just in terms of investment, you can give your personal view or the House PATRIZIA view, whichever you wish, or give us both if they're different. That would be interesting. But what's your sense in terms of if people are looking to invest at the moment, and you can choose whether it's Iberia or Spain or Europe, whichever you choose, where do you think in terms of a location or an asset class that you think is going to outperform in 2018?
As a general answer for the, you know, for the general activity and general market, unfortunately I forgot my crystal ball at home, so I think it's going to be difficult, but I can tell you more about what we are planning to do, which I think maybe could give some clues to our guests today. No? We are particularly active in residential. We believe it's going to be a very good type of assets in Spain and Portugal during the next 12 months. We like very much, and I agree with Mauricio's analysis on the logistic sector as well. I think it is. We have seen during the last 2 months a good evolution and quite a big number of transactions, and I think it will continue during 2018. Hotels, we also mentioned here. I think it's because of the Spanish characteristics is going to be also positive. Don't forget, we didn't mention when we were talking about the hospitality industry, but don't forget that 20% of Spanish GDP comes from tourism. So that's a very important figure to keep in mind. That means that it's our main industry, and I think we should take care of that, not only from a politician point of view, which they say they should take care of that, but also need to be, you know, good analyzed from a pure investor point of view, and I think we will see additional transactions in 2018. And I think those are our focus.
Okay, great. So that sounds like almost every asset class.
Well,
we should invest in.
Well, the question is, I mean, when you are talking about big investment firms, obviously you have a presence in many of the sectors. But just to complete it, if you want, I think, and continue with this alternative investment, I think we are going to see traditional pure real estate investors moving to new asset classes. Obviously, we mentioned this senior housing and these things, but also, and why not parking? We are seeing traditional real estate investors moving to the parking investment that traditionally were more contemplated from infrastructure funds. So I think there's going to be also some areas where we will see some movements.
Okay, good. Maurizio, where should we invest?
You know, if I choose a sector, the fund managers who run off funds on the other sectors will kill me. So you put me in a very difficult position, because then I should tell you, well, what we don't do, maybe prisons or something like that. You know, it's like the thing. As I said, we're positive in general, and you know what we are doing. I just want to answer synthetically, and you put me against the wall. I just say Madrid is probably the best bet.
Okay, great. It's a good job. Is that because we're in Madrid? Maurizio, yeah. Good, Nicole. What's your view? What do you think will outperform?
Well, actually, I'm not at all a sector friend person. So my answer would be, it's really not so much about the sector. It's about your own track record, the right business plan, and finding the right asset. So I think you can make money out of any opportunity if you do the right thing, basically. And it's very much about, you know, being an active manager, really, and don't pay overpriced prices where you already have very little gap to sort of do anything with it, because even developer returns these days are already highly squeezed because they're already paying too much for the land, and then you already sort of don't make your profits anymore. So just pay the right price from the outside and have the right management and business plan to, you know, do the project.
Okay, good. Thank you. Álvaro, what about you? It can be your private money if you're not allowed to answer as a lawyer.
No, I mean, what we are seeing is every time more clients look into residential and to PRS schemes, and we are seeing also every time more players in the logistic development sector, which does not necessarily mean that we'll outperform, but there are intelligent people thinking that this will be the case.
Okay, good. Oscar, it's looking quite good for you on the residential side at the moment.
Yes, I've got a clear answer. So myself, for Qualitas as a multi-product, we have decided to go into the residential rental. Maybe as a more general outcome on all of this. So there is that the decompression will not continue ad infinitum. So in the cycle, in the growing cycle, we reinforce our analysis of the stress case and the downside case, and making the decisions on this stress case and not on the upside case or bullish case that is I think it's towards the trend. And
Okay, great. Antonio?
Well, not much to add. Being politically correct, I have to say we have a wide variety of sources of capital to which we access, and we should be able to enter almost any sector. But if I have to, si me tengo que mojar, I would say we would be keen on beds and sheds. So any kind of housing, resi, hotels, student and senior housing, and obviously logistics. We want to be stronger in logistics. So.
Thank you.